Which pocket? Is it the large cap, mid cap and small cap you are more bullish about?
We might see Nifty maybe 7, 8, 10% more correction if this war continues. But
the sectors or the themes, whatever you want to call them, where we see that there's a good level of crash now and there might be a sharp recovery, let's say in the next year or two.
When a product's prices goes up, the alternate become affordable.
Private banks versus PSU banks.
I would tilt it a little more on public sector bank because
Whoever I speak to, they say the big money is made when you know exactly. Hi friends, my name is Rahul Jain. I'm a SEBI registered research analyst, and in this conversation, I've invited a couple of guests that you see right now. One more guest will join us. On your screen, you have Mr. Sunil Subramaniam, right? And you would have seen our very recent podcast, a lot of insights, a lot of good feedback that came through. So thank you for that. Thank you, Sunil for joining us today. And we have Kshitiz Mahajan, who is representing PMS World, right? He's the managing partner of Complete Circle Wealth, right? PMS, very, very good PMS. So, and one more guest will join us during this conversation at some point in time, hopefully. But I really wanted to get out some different perspectives, if there are differences of opinion, because right now, which way market moves the next day, we don't know really. Literally, that's what's been happening depending on the geopolitical situation. So from a PMS strategy perspective, like I'm hoping that you guys are putting more money because this is, as everybody is saying, it's a good opportunity. Which pocket? Is it the large cap, mid cap and small cap? Which pocket out of these three you are, more bullish about? I mean, I'm not saying you go and put 100% in any of those caps. I mean, that'll be suicidal maybe, but at least I want to get some perspective from your PMS, management perspective.
just to take our discussion further, the biggest risk is not to win capital market. That's the biggest risk.
Yeah.
Might be a possibility. We might see Nifty at some maybe 7, 8, 10% more correction if this war continues. But if you keep on sitting outside, that's the biggest risk. I'll just take one example. In Nifty only, if you have participated in last 20 years, and if you have been in the market all the time, your return is around 13% last 20 years. If you miss best 22 days, which are normally after these bad markets, you don't know whether it's going to be Monday, Tuesday, like we have seen Tuesday, Wednesday, 2 good days. If you miss those 22 days, like in last 2 trading days, markets have rallied around 4%, around 4%, let's say. If you miss best 22 days in capital market, your return is around 7.6 from 13.5. That's a difference which you make. Now, let's take other way around. I'm talking big and markets fall. I'll take you to a date called 14th Feb 2020, which is Valentine's Day, before COVID, supposed to be my wife's birthday also. So your Nifty was around 12,400. 2020, 14th Feb. 24th March, first big lockdown happened. Nifty was around 7,700. Had been you invested at the peak of the market at 12,400. Now, obviously, markets are down, but at 12% compounding in 6 years' time, we have doubled. If you take the TRI index, we have doubled at the peak of the market, and you have fallen by 40% after that. You have still in 6 years, you have doubled your money. Had it been you invested at the bottom of the market, your money is tripled. Had it been it's an average out, it's around 2.5 times. So all I'm saying is, don't put your all eggs in one go. What we are doing now, coming to the question, between large, mid and small cap, we are going around 60% in large cap. We are around 26, 27% in mid cap. We are around 8, 9% in small cap. We are keeping some powder dry. Having said that, we are taking now 8 to 10 weeks to deploy, which we were initially doing 10 to 12 weeks. I think we are very much close to what we can call as the bottom. I don't know whether it's a bottom or not. Maybe 10% down from here, more. You never know. But I totally agree. The game spoiler can be oil. But if any foreign institutional equity is saying something, I will like to actually go contra against that. Because normally when they are talking something really bad, we are supposed to go do something good only. So I'm totally against. I think as a country, one game spoiler can be oil. And that too, the government is playing it very nicely. They have good equation with Russia and other countries also. We have our things going nicely. But yes, if oil steps high, we have 85% of the oil which we import. Our capital account deficit increases. That means dollar moves out, currency further depreciate, and further oil prices go high for us because we have to spend much more dollars. So I'm saying that can be one of the vicious cycle which can impact inflation to a bit. But at a time when you are at a low inflation, at least the reported numbers are low. Okay. Still you are in a better position vis-a-vis what happened in 2008-9 when you were already at 8.5-9 and oil jumped to $120-$130. Still you are in better position with a foreign reserve for which is excess of $650 billion. So I think that's the right approach. Believe you me, after a year and a half, we'll be doing some show and we've been talking, hadn't we have invested in those at those levels. Again, people who are watching us, we have 100 rupees, go 10 to 12 STPs, do 10 to 12 STPs. Don't look at stocks. If you are not full-time into it, go for mutual funds, go for ETFs, go for index funds, or go for managed portfolios. That's what I want to tell you. Many people keep on asking for 100 baggers. I've seen a couple of, and in your shows also where we've been talking about 100 bagger ideas. We have 13 mutual fund who has NAV of more than 1,000. 13 mutual fund, that means they become 100 baggers. So there is a managed portfolio, there is a fund manager at very minimalistic fees. He's doing this job. If you think that you understand the funds well, you can go direct. There is a direct plan which SEBI has. I'm not saying that you have to take advisor only. You can have your route, but that's the right allocation which one should look at. And if somebody who has a risk appetite, who's someone who's in his young age, between 25 to 35, you can actually step up some allocation towards small and mid cap. And one last thing before I wind up this question, whatever investment you are doing, please align those investment with a goal. When you I run marathons. When you have an end point, you will run till that point. You will continue till that point. You will not wind up in between because of these these speed breakers. रास्ता लंबा है तो बीच में स्पीड ब्रेकर होगा ही होगा रोड पे. वो तो पॉसिबल है ही नहीं कि स्पीड ब्रेकर नहीं है. बट स्पीड ब्रेकर में वी हैव टू स्लो डाउन एंड अगेन वी हैव टू पुश द एक्सीलेटर. And once you are close to your goal, at that time the right strategy is move toward a safer asset. Pick your money, park in your bank account, liquid account, arbitrage, whatever safest asset you see. Because you don't have to actually go to the goalpost. Couple of goalposts are not movable, which is your child education and your retirement goalpost. बाकी सब घर लेना है, गाड़ी लेना है, you can actually, you can postpone that. But these are the goalposts where you should be worried about, yes, that you should take off chips from the markets and park in a safer asset class.
Agreed. So, Kshitiz, you talked about large cap 60%, around 26% mid cap, and remaining small cap. So, this allocation, was it pre-war allocation, or have you now changed it because of the war situation? Has it undergone any change, or this was anyways your allocation?
Almost year back, we were having 50% in large cap.
Right.
50% in small and mid cap. That's how it used to be. Now it is present allocation, but you will see in next 5-6 months time, we will move till more towards mid and small cap over next 5-6 months time. That's
right. Okay. Sunil ji, where do you stand from a market cap perspective? Any perspectives on that?
Yeah, I am slightly opposite of Kshitiz. I would put 60% in mid and small caps and 40% in large caps. And the reason is that he's saying he'll do that a few months later. I believe the time is now, because you look at the impact of the war. For example, 1 month, you won't believe this data. Small and mid cap have fallen less than large caps. Because there is a resilience around the domestic capital, which partly by the investor giving it in multi-cap funds where they are forced to put money into mid-cap and small cap, but partly because that is what I would say is that less external risk-oriented component of our portfolio. Right? When I say external risk, I'm not just talking about the oil-related risks, but I'm also talking about the FII investment risk or non-investment risk. Right? Because FII's investment is largely in the top 100, 150 stocks. So whereas domestic capital is by nature geared to be spread. So to me, looking at the fund manager actions, partly his hands are driven by investor allocation. If you see, I think 55 to 60% of the SIP book is meant to buy small and mid cap stocks the way the industry gets the money, right? So there is a natural support for buying, and the correction in the valuations means that the fund managers will migrate towards that. And what happens is that they've been actually buying the large caps, which the FIs have been selling over the last, few months to a year, whenever, right? September 24, the FIs started selling. So my point is that when the FIs come back, when the risk peters out, whenever it does, those large caps will be sold into the market, and who will sell those will be the DIS.
Right.
to the FIIs, right? They will wait for certain gains there. Obviously, they won't sell the moment they come to buy. You'll set limits and you'll make profits, but you'll book profits in the large cap, and the entire DII community will shift more its allocation to the mid and small cap. So I'm just saying that follow the money, smell the money and follow it, right? Because the confidence in the Indian economy comes from a combination of the income tax cut and the GST cut as it plays out in the economy, right? Which is largely one. The second is the capital goods cycle and the EU trade deal, and hopefully a US trade deal if it gets signed. I'm trying to look slightly longer term, affects mostly the MSME, SME, micro cap, small cap, and then wrapped up to mid cap. So the economy is essentially geared around growing around the non-stock market piece plus the bottom end of the stock market. So given that view perspective, I would say this is a time, because a correction happened and the fear about valuations about small and mid caps has kind of evaporated a little bit because of this correction which has happened. So I would tilt the portfolio right away into a 60% mid and small cap, and a 40% large cap. What Kshitiz is saying he'll do a few months later, I would be a little more aggressive and start doing it now because of the reasons that I just spelled out.
Okay. No, understood your rationale, Sunilji. Now, I was looking at some sectors, okay? And for example, a couple of stocks in my portfolio. So, housing finance companies, okay? Especially the smaller caps, they're like 50-60% down. Right? Look at, for example, real estate sector, likes of DLFs and Lodha's huge fall. I mean, they have come to like 28-30 Ps, and a year back, if you look at them, they were like 50-60 Ps. So, 50% correction. Banking has corrected as well recently, right? I mean, Bank Nifty itself from 62,000 to now 54 or 55, depending on when people are watching this, has sharply corrected, right? So one is to look at large cap, mid cap, small cap, but within them, right? I think the big money, so whoever I speak to, they say the big money is made when you know exactly, not exactly, but at least have that pocket understanding as well. It's not that if you just deploy your money in Nifty, okay, fine. You might not get 12% returns. You might get, 15 or 14 because maybe you got the bottom perfectly right. But hey, what is a big deal about Nifty, right? I mean, you got to if you want to really make big money, it has to be in the certain pockets, right? And I just want to get some perspective on the pockets or the sectors or the themes, whatever you want to call them, where we see that, there's a good level of crash now. And this is where we need to focus. Even if you pick 2-3 stocks or a ETF or a mutual fund representing that particular sector or theme might be a good win. And there might be a sharp recovery, let's say in the next year or two. Right? I'm not saying tomorrow, but let's say 2 years time frame, because recovery may take some time. So I want to start from you, Kshitiz, that from a PMS perspective, which pockets look interesting to you now?
Well, Rahul, I will come to real estate also, but if you ask me the key sectors, what we are looking at, one is banking and financial services, as you mentioned. Second is auto, which is manufacturing and auto ancillaries. Third is defense, which we are stepping up. We already have, in fact, luckily from the beginning, we have some good allocation on the defense side. And fourth is obviously there's an ecosystem building around data centers. So there is not a pure play on data centers, but there is an ecosystem building around data centers, which include a lot of companies. Banks, obviously, Bank Nifty has been a laggard for the last 6-7 years. Not now, because heavyweights, whether HDFC, ICICI, Bajaj Finance, pick any name which is a heavyweight in Bank Nifty, has not been doing that great. And the recent news of HDFC Bank, further we have seen it's more of a sounds like more of a well-destructor, right? 85-90,000 crore of profit for this year, what they are eyeing. The bank is available at 11 trailing P. I've never seen HDFC Bank in my life at that valuations. Not that. And again, we are just discussing. There is no recommendation here. It's a part of my portfolio. I want to share that also. But I'm saying we are looking at with double-digit credit growth in a country where we are targeting 10-11% of nominal GDP now. Looks like we should hit 10%. I think credit growth, a lot of housing finance company, a lot of banks, a lot of NBFCs will gain from there. We have, if you see, we have duopoly in most of the cases. We have two RTAs, Carby Chems. We have two depositories, CDSL, NSDL. We have two key exchange, NSE, BSE on the equity side. So, again, there are broking companies, there are mutual fund companies. Many people are talking about a broader participation by people. So I used to be part of asset management company. I used to be on Sunil sir's side. Hardly 6 crore people have unique unique mutual fund folios. Hardly 13.5 crore people have unique demat accounts. We have 62 crore PAN card linked to Aadhaar, the investable population which we have. But the dependency of families are around 20 crore in overall number of people who are depending on our investing world. So it's not a small number now. And thanks to this domestic participation, think about this 6 crore getting up to 12 crore, 15 crore. And that day will not be far, we'll have 30,000 crore of SIP going on a daily basis. I don't know whether 3 years, 4 years down the line, but it will happen. And thanks to this domestic participation, we are able to sustain this. So a lot of structure building up. Look at the foreigners. Forget about what scope which you, I, and Sunil sir, we are discussing on this platform. There are 6 acquisitions recently have happened. Edelweiss for housing finance, they're into Cardinal. We have Blackstone getting into Federal Bank. We have Emirates NBD getting into RBL Bank. We have 3-4 more acquisitions. I'm just give me a second. Can I just IHC, IHC getting into Saman Capital. We have Wabba getting into IDFC First Bank. We have Bain into Manappuram Finance. So many acquisitions which are there. So many acquisitions. So I very strongly feel banking as a sector will do exceptionally. Banking and financial services will do exceptionally well. Don't miss out on the newest businesses also in that sector. I don't know which one is going to do well, but you can't miss out a tech part to it also. Second, we see auto and auto ancillaries doing exceptionally well. पहले वो रोटी कपड़ा मकान का कॉन्सेप्ट था, अभी रोटी कपड़ा मकान और गाड़ी का कॉन्सेप्ट है. So you can't ignore that because people, they want to have their own vehicle. Per capita GDP is stepping up. People want a better life. We have a young and aspirational population. People keep on doubting about that. ये young population को सब आसानी से मिल रहा है. सबको सब आसानी से नहीं मिल रहा है. We have more than 65 crore people less than 30 years of age. It's a young India. Average age is 32. I very strongly feel that this country is going to do exceptionally well. I've been getting calls from my friends, my clients in Dubai. Again, they are looking back at India. We are safe here. Come what may. We have seen Operation Sindoor. We have seen it was a two-way war. You believe me or not. There are a lot of supply from China going to Pakistan. It's just that it was not coming from the Eastern Front. Everything was coming from the Western Front. But all I'm saying is, auto part will do exceptionally well as people will keep on stepping up. People are looking at more value per car or per bike. What more things are coming as a EV thing, if it's coming, as a tech part, what more it's coming. So people are looking at that, and you're getting more value for your money which you're spending in all these ancillaries. So look at the industry leader in those fields. Let's say you have a law manufacturer, who's the industry leader? You have an EM, who's the industry leader? You have a OEM, who's the industry leader? So all these industry OEMs are known to be calculated on per car kit value or per bike kit value. Let's say X company has 4,000 used to be a per car kit value. They used to supply per car 4,000 rupees of a part. Now it's gone up to 40,000. Can they go up to 60,000? Look at that, those businesses. How they are innovating. Are they going to get affected because EV is going to take a market share? अब कोई बनाई एयरबैग्स रहा है, सीट बेल्ट्स रहा है, स्विचेस रहा है, तो उसमें लाइट रहा है, तो उसमें क्या फर्क पड़ रहा है whether you are driving an EV car or you are driving a normal petrol or diesel car? So I'm saying auto is one part which is going to do exceptionally well. Third, which is the most important part, which we are looking at, the defense. And we have seen what is happening right now and the stories around Iran and US escalation. Every country will step up their defense budget. Not everybody can afford F-35s of the world or F-15 of the world. You will have a lot of defense part coming to you also. Forget about other things. Internally also, we don't have enough, enough of missiles. And I must say that there's a lot of stepping up happening in India per se also. So we have a lot of things happening here also. I think defense, whether it is aero defense, whether it is your artillery defense, whether it is your missiles, rockets, all type of defense. And we have seen roadshow during Sindoor escalation, how our defense mechanism or how our Iron Dome has worked. I think domestically also we need to step up that, and as well as there's a lot of export opportunity which are also coming, as government has said that we want to become self-reliant rather than importing a lot of stuff from outside India. So these are the three key sectors which we are looking at. And fourth last is a lot of ecosystem developing around your data centers. And now everybody's saying there is no data center pure play. I'm saying look at the ecosystem. You have cables, you have transformers, you have batteries, you have coolants, you have water, you have overall land infrastructure. So you can play a quasi through a quasi route. You can play a data center infrastructure also. So there are a lot of businesses in that also. So we are building a key portfolio around these 4 things.
This is brilliant, Kshitiz. And I think on banking, I do have questions, but I'll let Sunil sir also, contribute to this. And I'll come to this data center theme, because I'm still wondering why no AMC so far has come up with anything on this space. I mean, in the budget, tax holiday was announced up until 2047, right? I'm really hoping that at least for retail investors who can't really go and understand that detailed ecosystem that you talked about, Kshitiz, at least there should be some offering for long-term investors. By the way, thank you, Vijay ji, also joining us. I know you are possibly in a temple, coming out of the temple maybe for Ram Navami celebration. Happy now Ram Navami to all of you. I have not even said that. We just got right into the discussion. So, okay. So coming to you, Sunil ji, then what's your take on the sectors and themes, please?
So I'm about 80% in agreement with Kshitiz's allocation. Broadly, I think he's laid out the base case scenario very, very well, and I'm broadly in agreement there. The parts I would add to it, right, is in terms of, one is on the data center play. I think real estate is going to be a big beneficiary, because you need space, and right. So I think that commercial real estate part, and why I get bullish on the commercial real estate part and all that, is because of this reclassification of REITs as equity asset class, because it opens up the whole pool of the mutual fund equity thing to now finance the real estate through REITs. So I think the huge funding option opens up for the real estate industry. So I think that those from the data center play itself, it's a big plus. Plus, I expect that ultimately the GST cuts will lead to the housing boom, because that's not fully translated. Because right from cement to every building material has had a GST benefit. The problem has been the recent interest rate scenario, where RBI was strongly supportive with the rate cut, but given now expect the inflation to spike to 5%, there are rumors about RBI evaluating a rate hike. Now, I'm not in that house, I must tell you that. Why? Because this is a supply side inflation spike, not a demand side spike. So I believe it will be very wrong of RBI to consider a rate cut when you're then cool down demand even more. So I'm not in the camp which says a rate hike is due, but market feels that, and that's why banking stocks and other stocks, housing and finance stocks have suffered, because there is thing that a rate cut to gaya, shayad rate hike ho sakta hai, but those to me are actually the good times to buy, because they are going to lead, like you said, housing finance is underperforming, right? It's actually a good time to buy, because the longer term, the real estate plus housing plus commercial real estate piece, I believe, is a strong growth trajectory. So that's one thing I'd like to add to what Kshitiz said. The second part is a small nuance in terms of the defense. I feel that the Nifty Defense Index is not truly reflective of defense, because it's still 70%, 80% public sector defense companies. But I believe the defense of the future is the private sector, which builds drones, builds UAVs. And I saw in Operation Sindoor also that was the main thing. And all these European countries, Asian countries who build their arsenal are now going to build it on non-human warfare. So I believe there's a huge export opportunity for private sector defense firms, those which are listed and those which will get listed in the future. And I see our defense exports itself jumping from 20-odd thousand crores to 50, 60,000 crores in just the next 4 to 5 years. So I would tilt my portfolio a little bit towards private sector defense. Please keep getting added there. So that's the second tweak I would like to add to him. And the third tweak is I would recommend putting in a 10 to 15% allocation to capital goods and infra play, because it's not yet time, but I'm saying that the natural progress of a GST cut driven consumption boom is to flatten out the K-shaped consumption into a more of a U-shaped consumption. It will take time to do, but when that happens and capacity utilization grows up, the real growth story of India comes from private capex coming up. I know it's early days for that. You're probably very early into it, but if you start allocating 10 to 15% of your portfolio to that space now, later the run-up will be like huge. And you've seen that a lot of these companies, and though I don't want to give a recommendation on stock, I don't talk stocks, but take L&T. it's got hurt. It's the biggest capital good player. It's got hurt because of the Gulf uncertainty. Now, what about his domestic capex? He's the main foundation stone of domestic capex. So it's now available at a very cheap price compared to earlier. So what my point is that I would allocate about 10 to 15% to the capital goods space gradually and up it as the story becomes more clear in the months to come. That's all I wanted to add to what Kshitiz said. Otherwise, I'm broadly in agreement with the way he's built the base case scenario.
Okay. No, this is very, very useful. And I'll come to banking in a minute. I want to go to Vijay sir as well. Vijay ji, we were talking about the sectors or the themes that look very, very interesting now from an opportunity perspective. Let's say a couple of years time down the line, these themes might come back up because of, war situation stabilizes. What's your view on sectors and themes as of now, which looks interesting to you?
So I think one is definitely defense. And what has happened that the resilience of Iran is taking away the aura of invincibility of US. So I think the people would look at outside US, outside Eurozone, and India, in my opinion, will emerge as one of the key suppliers of defense. So I think defense is going to be a good idea. Second thing is BFSI, is more and more economies getting formalized. And the BFSI segment would be outside banking industry, because banks have their own challenges. Everything comes on the balance sheet. But if you look at capital market intermediation, whether it's asset management company or a stockbroking company or the stock exchanges, I think they will play a key role in the growth. Third is the healthcare segment of the market. I think it's going to be very, very important segment of the market. And India, over a period of time, will become the global hub for not only the medicines, but also taking care of ailing people of the world. And right now, what is happening is very interesting. And this is a very important thing for all of us to understand. When a particular product's prices goes up beyond a certain limit, then the alternate become affordable. So what we are seeing right now in the oil is actually a demand slowing down of the oil product. It's just not the question of availability, but also demand going down. So the kind of runaway Middle East had over the last 20, 30 years, I think it will be a very different world we are going to live in going forward. There are a lot of Indians who moved out. I think in India are also going to create similar kind of center. So I think Nicobar Island, where I think the government of India is going to put a lot of things where it will become a center like what we are seeing in London or Singapore or Dubai. So my point is that irrespective of sector, be long on India. You will make decent money. And if you're confused, just go and buy a plain equity mutual fund or buy a Nifty 500 fund. You will do wonderfully well over a 10-15 year period. Don't look at what is happening right now, because it may color your judgment that the world is going to fall apart. We have witnessed these kind of things many times, but I think the world is going to be very different going forward. But it is going to be very, very favorable to India. There are various data points, we can talk about it, but more importantly, just look at where is India today. We are friend with Iran, we are friend with Israel, we are friend with all GCC countries. The only country we are not friend with is Pakistan. China, our relationship is improving. US, our relationship is on and off because of one individual, not because of anything wrong with people or economy. And that individual rating is going down in USA. So I think, in my opinion, good days are ahead for India. And whenever people compare India with any other market, please keep this thing in mind that India democracy. Look at GCC country, how many countries are democracy? China democracy, Russia democracy. And India is very chaotic democracy. If somebody don't believe in this, please become a committee member of Residents Welfare Association or Cooperative Society in India and take up a redevelopment project. You'll figure out how we behave. So in a democracy, things move at own pace. So we can't have that kind of a standard, China kind of a standard in a country like India. I'm seeing Nifty from 1,000 point And I hear the similar kind of story every time. I started my career in 1990s, and from 94 to 92 to 87 to 97, I've seen everything. Asian crisis, Y2K11, GFC, COVID, and every time we hear the same kind of story, but India keeps checking along. So my simple message is very clear. Be long in India, be long on India.
That's really great, Vijay, and I think I quite like the idea of healthcare, to check on healthcare as well, because that definitely, in my conversations with a lot of people, people have talked about the tailwinds that the sector enjoys. I just want to come back to the last point, and feel free if you don't want to contribute to that one, is on the HDFC Bank crisis, because I know we broadly are in line in terms of the banking financial services, and not just HDFC. If you look at what has happened in the last 3 to 6 months, IDFC fraud case came out in light, 560 crores. Then HDFC crisis happened because of the controls and practices. Yesterday in the news, Kotak Bank also, there was a fraud case reported. Again, the investigations are going on. 160 crores FD scam. And none of the Sarkari banks have come into light. I mean, there's a pattern here. One is the private banks versus PSU banks. Then secondly, frauds driven by internal employees and the lack of the controls, right? While, generally the thinking has been that PSU banks lack transparency and etc. And, there has been that narrative for years. I mean, I've grown, reading and listening about how bad the SBIs and the Andhra banks and these banks are. I just wanted to get a perspective on private banks versus PSU banks, given the last few months of some drama happening. And I know these could be business as usual. It might be just the coincidental that the timing has happened, that all of these things are coming up. Anybody, out of the guest panel, I just wanted to get your views on the private versus PSU banks.
So Rahul, first of all, let me just quote from, I think it's RBI's Financial Stability Report or Indian Economics, or either of that. Just last year alone, there were 38,000 crore rupees of bank frauds happening in the banking industry. So wherever there's a money, whether it is a fintech platform or wherever there's a money, then people try to scheme the system. The point is not that. The point is that how does system respond to? I think the system will respond to that much better. As far as your question on the private bank, so what was happening over last 20-25 years, that public sector bank was losing market share to private sector bank because of better technology or technology adoption. But the public sector bank has caught up with that idea. The second thing about what has happened is that earlier, suppose you have money lying in your saving account, you won't do anything because first of all, you will not even know where the money is lying in saving account or not. Now you get instant messages. Now you have fintech platform. You can use that money to get deployed in liquid funds. Similarly, banks used to sell third-party product and used to make lots of money. Now that has become a little challenge going, like mutual fund revenue of most of the banks has actually, plateaued and that is not grown. The other fee-based income is also a challenge because you used to make money through credit card or debit card. Now your UPIs, people can transact through that as well. So you used to have a huge tailwind for the banking industry, particularly private sector bank. So it is not that a private sector bank start doing badly, but the kind of growth they had going forward, the kind of growth will not be as sharp because now the public sector banks are also coming up. And sometimes the public sector bank system may look bureaucratic, but sometimes they works as well when it comes to fraud and kind of thing. And now with the so biggest risk in banking industry is basically default by the clientele. Except on personal loan, which are given unsecured, but now we have a lot of data available and if you look at Banking Insolvency Act, earlier used to take 365 days to convert a non-performing account to performing. Now it takes less than 30 days. So as the banking industry is getting cleaner, the kind of gap existed between private bank and public sector bank is coming down. And as far as your particular question concerning HDFC Bank leadership challenge, I tell you, if the empire cannot take a knockoff and get up, it is not the empire to start with. So any big organization like asset management companies, we have seen front-running cases, but the organization learned, put system back in place. And here in HDFC Bank, I can tell you, with all authority that as far as bank is concerned, I don't see any big challenges as far as internal working is concerned. And now even the RBI has put a clarification on that. And when a person of KK Mistri's caliber takes over, even for a temporary purposes, I think it speaks volume, because he would not take if he's not very confident about it. So I very honestly, I don't see big challenges as far as that particular story is concerned. However, you could have a challenge as far as what will happen to the future growth of HDFC Bank, or for that matter, any private sector bank.
Okay, that's well understood, Vijay. Thanks for that. Kshitiz, where is your head on private versus PSU banks?
I think Vijay has explained it really well. All I can tell you is that at what base HDFC Bank or SBI Bank are, for them to grow, what it used to be 20% growth, that's not going to come for sure. There are a lot of private banks who are at better valuations, offering you same type of service with better names and with better NPAs. The growth will come from there for sure. As I said in the beginning, also 85,000, 90,000 crore of PAT. Bank has a long runway in front of its entire setup. You see, all Chinese banks are between $5 to $10 trillion of total book with what they manage. We have only $1 trillion of book what SBI or HDFC manage. So the growth is going to come. And as I said, there are so many private players which are coming into the small sector banks. So there is both these PSUs as well as private banks will do well. In terms of bank accounts, we have enough bank accounts. But if you are in a country which is going to grow at 11-12% of nominal GDP, your ecosystem, banking ecosystem will surely grow at 14-15%. So I see both will perform hand in hand. But you need to do a lot of maths at your end. Now you are saying these things are coming and we are hearing about protocols or something is cropping up. Wherever there's a financial transaction, fraud will happen. Now, how you will react to that fraud, how soon you are solving that fraud, that is something has become really fast nowadays. And PSUs, of late, as I think a lot of government focus and push also, many cleaning exercise has happened over a period of time. Much more things have become much more transparent, and I think both of them will coexist. I don't see this one against another. You can have a combo of both, but yes, I see private banks, by virtue of their inertia and growth, will supposed to do better than PSU banks.
Okay. Thanks for that, Sunilji. What do you have to say on that, please?
No, I broadly agree with both Vijay and Kshitiz here. My only thing is I'm a little more in favor of public sector banks, because of the fact that they are a little more of undiscovered value. And the reason I say that is because I strongly feel that in the course of this year, or maybe early next year, there will be a mega PSU bank merger. Because one of the big things that the PSU suffer from is lack of scale. Even HDFC and SBI are not really top 10 banks, right? They are in the top 100, 50s and all that. So I think that raising money, because we saw that the credit deposit ratio, the credit is growing much faster than deposits. So banks finding it challenge to raise money, they have to tap international markets, either through dollar loans or through masala bonds, where you don't have the currency impact, right? So, but they have to have scale. So I believe that buying in PSU banks today, it buys you an opportunity to buy you before they become scaled up. Because a lot of cleanup has happened, a lot of thing is happening. Now, earlier the case was, the merger was a bad bank being merged with a good bank to protect the bad bank. And hence the good bank valuation and everything would go down, saying they have to deal with this whole crisis situation of the bad bank. But now I feel this next set of mergers will be good banks with good banks, will be medium-sized with medium-sized banks, so that they become large banks, and wouldn't be surprised if the top few banks themselves are merged among each other to create global scale banks. So I believe that when that news becomes very public and all, the share prices will reflect it. So more of a tactical play, I believe that for the reasons what Kshitiz and Vijay ji have said, I would say I would tilt it a little more in public sector bank, because of the discovery process which will happen when a merger is announced and everything happens. The second point why I favor PSU banks is, like I mentioned in my previous answer about the capital goods story and the private capex cycle starting. The private cycle is executed by MSMEs and SMEs. And lending to that segment is entirely the monopoly almost of the PSU banks because they understand it. They've done that, they lent that, they've burnt their fingers, and that is relationship banking. It's not just looking at balance sheets, it's about the promoter, which they are much better at. Yes, they do go through big NPA cycles because of that, but they understand, are willing to lend to them to do that, right? So I believe there'll be a huge boost, and those loans to the SME and SME are at high-end loans. They are 13%, 14%. So the net interest margins are very high there. So I would say that I would tilt my portfolio a little more to PSU banks for these reasons. But otherwise, the broad logic to what both of them are saying, I'm fully agreement with.
Okay, this is brilliant. No, thank you, everybody. I think we've gone through from, I know Vijay you joined us a little bit late, but we started from opportunities and finally closing on private banks versus PSU bank. I got a lot of insights. So thank you so much, everybody, giving your time and, having this very bold and open discussion. I really, really appreciate all of your time. So thank you. And again, look forward to speak to you again on multiple occasions, either one-on-one or this type of setup. I'll be definitely in touch. Thank you once again.
Thank you.
Thank you, Olaf.
If you haven't yet subscribed to our channel, humble request that you hit the subscribe button now, because your subscription is our motivation. My team and me gets really motivated once we see your subscription. So please hit the subscribe button now, and I'm going to see you very soon. Until then, keep rocking.